Hello, guys. Good day once again. I want to remind you that I am always available to bring you new information. All right. So your comment and your questions has made me put up this tutorial to explain what ask price, bid price, and then spread means when it comes to trading forex and probably stocks. All right. So before I delve into the meaning of what ask price, bid price, and spread, I'd want you to spend a second, like this video, and then also if you're not subscribed yet, make sure you subscribe and then you turn on the notification bell icon. I still want to remind you that you pay nothing for liking this video. It doesn't cost any amount to do that. All right, so may you kindly do that for me as we delve into the meaning of bid price, ask price, and then spread. All right, so guys, let's go. Now, what does it mean to say bid price and ask price, and then there's meaning of spread? Okay, a lot of people ask questions about this, so I saw the need for me to record this video to explain it. All right, so let's look at the difference between these three key terms or these three keywords when it comes to forex trading. All right, so let's first of all look at the meaning of bid price. All right, so it says bid. Bid price is the price a buyer is willing to pay for an asset. Is the price a buyer is willing to pay for an asset. All right, we'll come back to bid price. Now let's look at ask price. Okay, now ask price is the price a seller is willing to accept for an asset. Okay, the price a seller is willing to accept for an asset. So when you subtract bid price from ask price, you're going to get the spread. Okay, so let's look at an example. Okay, so I want you to pair your currency, pair your country's currency with the US dollar. All right, so we are going to do some quick example here. We want to do a quick example. Okay, so let me use this probably no let me let me go to WhatsApp, and I'm going to use this to do an example. Right, good. So let's look at something here. Okay, I'm in Ghana, so I'm going to use the Ghana cedis to do this example. All right, so let's look at we have the USD, okay, against the Ghana cedis. All right, which is GHS, USD and GHS. Okay, USD and GHS. So when you go to the bank and then you have Ghana cedis, all right, we want to look at these two currency pairs. We'll use this to what we'll use this to explain the meaning of the bid price and the ask price. All right, so you go to the bank and then you have Ghana cedis. You want to buy the base currency, which is the USD. All right, so probably the bank would want to sell the USD, or the bank will want to sell the dollar to you at maybe 15 Ghana cedis. Okay, 15 Ghana cedis. So that's the highest price the bank is willing to sell the dollar to you. You have cedis and you want to convert it into dollars, or you have cedis and you want to buy dollars from the bank. So the bank will do what? Will sell the dollar to you as what? 15 Ghana cedis. So that is the highest price you are willing to buy the asset, which is the US dollar. That is the highest price you are willing to pay for the what? The US dollar. So in this case, the US dollar becomes the what? The bid price. Okay, so the US dollar becomes the what? The bid. Okay, the bid. And then we have the Ghana cedis becoming let's look at this once more. Now, for example, you buy the US dollar, and then the next day you come back to the bank that you want to exchange. Probably you need money urgent to do something, so you want to what? Sell your dollar. Okay, you bought the dollar the previous day. Now in the next day you come back to the bank, you want to sell your dollar to the bank for cedis. Okay, you want to sell your dollar for cedis. Now the bank is not going to buy the dollar from you at the same rate it sold it to you. Okay, the bank sold the dollar to you at what? 15 cedis. Okay, 15 cedis per dollar. But when the bank is buying the dollar from you, the bank will buy it at a lower price. Okay, so we'll say 14.5 Ghana cedis. So the bank, you bought the dollar from the bank at 15 cedis. Okay, 15 cedis, GHS, 15 Ghana cedis. Okay, 15 Ghana cedis. So, and then later you went to, sorry, let's do this, guys, sorry about that. You bought it at 15 cedis, and later you went to the bank to sell. The bank is going to sell it to you at 14.5. So now we have, let me do this here. Okay, so the bank sold the dollar to you at 15 cedis, and you went to the bank to sell the dollar again. The bank will sell it to you at 14.5. So in this case, the difference between 15 minus 14.5 is what? 0.5. So it means that this is going to be the spread. The difference between the bid price and the ask price gives us the spread. So in this case, we can say that bid minus ask equals the spread, and that is the profit the banks make. Okay, that is the profit the banks make, because the bank will sell the dollar to you at a higher price. Okay, it will sell the dollar to you at a higher price and buy the dollar from you at a lower price. So the difference will give you the spread, and that is what the profit the banks makes as the money the banks makes as profit. The same way when it comes to trading, brokers also makes profit. All right, so the difference between the bid price and the ask price will give you the profit of the broker. So I want to use this as an example. So like I said, let's go over it once again. Bid price is the price a buyer is willing to pay for an asset. Okay, so the price you are willing to pay for the dollar. So you bought the dollar at 15 Ghana cedis, and then the ask price is the lowest price a seller is willing to accept for an asset. So you went to the bank, and the bank was buying the dollar from you at 14.5. That is the lowest price you are willing to accept for selling your dollar. All right, I believe this is very understandable. Now I want to use the Bank of Ghana exchange rate to illustrate this example. The Bank of Ghana exchange rate to illustrate this example. All right, so this is it. You see, we have different currency. We have the dollar, pounds, and euro. Dollar, pounds, and euro. Now let's look at it for each of this currency pairs, okay, or currencies. Good. So if you are buying the dollar from the bank, look at this is the buying. If you are buying the dollar from the bank, okay, you realize that no, this is when Bank of Ghana is buying the dollar from you. Okay, when Bank of Ghana is buying the dollar from you, they will buy it at a lower rate. Look at it, 13.0026. They will buy it at a cheaper or a lower rate, and then when you are going to buy it from them, so they will be selling it to you. That their selling price is 13.0156. So there will be a difference here. The difference between the buying and the selling is actually going to give you the bid price, and that will be the profit of the bank. It applies to the pounds. Okay, you see that the buying rate is the rate at which they buy from you is lower, and the rate at which they sell to you is higher. The same applies to the euro. All right, so that is the meaning of the bid price and the ask price. Now let's go to MT5 to check out this what the broker also does, the meaning of the bid price, the ask price. Okay, good. Now when you go to quotes, you realize you see some numbers here. You see, this is going to be your bid price and then your ask price. Bid price, ask price. For each of the assets, we have what? The bid price and then the ask price. And always the bid price is higher than the ask price. So you realize this, we have 206, this is 11, and this is 13. Okay, you realize 13 is higher than what? 11, which means that the bid price is higher than the ask price. Now the reason is, when you are placing a buy on GBP USD, for example. Okay, let's go to the chart. You are placing a buy on GBP USD. The moment you realize that there are different between there are two lines here. So we have bid and then ask. Okay, bid is the green line, and then ask is the up, the top line. Okay, now when you place a buy, the broker will sell will place the buy to you at a higher rate, and when you place the sell, the broker will give you the sell at a cheaper rate. Okay, let me just pause it here. Let's go back to here. You see, the buying price is always higher. You see 206.13, this is 206.10. so this buy is higher than the sell. Okay, meaning that the bid price is higher than the ask price, and the difference between the two is the spread. Like I said, that is the spread, and that is the profit the brokers would makes. All right, guys, so with this video, I know you now understand the meaning of what bid price and ask price, and then spread. Bid price, ask price, and then spread. All right, so if you don't understand anything, I want you to leave your comments and then your questions in the comment section. I'll respond to it as swift as possible, and then we can have we can actually be at parity. Thank you so much. I would love to see you in my next video. If you have not subscribed, make sure you subscribe, and then you turn on the notification bell icon so that you get access to all the content that I upload. Thank you so much, and have a wonderful day.